Now listen, signs of the times that things are going to get better. According to Redfin, the United States housing market now has 508,715 more sellers than buyers. That is the most sellers of outmatched home buyers by over a decade. Again, you have more control over your outcome with buyers than anything. So more inventory is like, overstocked grocery stores. Prices drop and buyers buy. That's what happens with grocery stores, and that's what's going to happen with the U.S. housing market. That's where you come in. 1/3 of all the housing markets across the United States right now are seeing prices fall. Of the nation's 300 largest housing markets, 109 right now experience home price declines between June 2024 and June 2025. That compares to just 31 of the 300 markets posting annual drops in January. Again, is this bad news or is this good news? I mean, for me, this one's a layup. It's great news. Now, here's the best part of this whole thing. It's not the solution, but it will offer some relief. Rates tend to improve when the economic data is weaker than expected. Today's job report was only moderately weaker than the headline level of 73,000 versus 110,000, but it was the revision to the past months that really got the market's attention. Those revisions removed 253,000 jobs from the initial reported numbers. And as a result of that, today would be a great day to lock a loan. And I'll tell you, if you work for a banking operation as opposed to a broker, your rates might be as good as ours were last week. Gubbies in the mid-fives? Yeah. Fill out the information down below and let's have a conversation. And I want to say this, rates don't matter. If your company tells you that rates don't matter, that's because you're selling crap rates. It goes like this. Rates don't matter until rates matter. Now, we just saw one of the fastest climbs in rates in history. So yes, sellers and buyers remember those 2s and 3s and they want them back. It's not going to happen. So they're looking for the best rate that they can get on the best deal in front of them. So if you have a choice to sell good rates or bad rates, well, I choose to sell good rates. Now, you're going to hear that if you work with a banking operation with higher rates, that you're not going to get the same service or the same tech service or same tech support or same technology. And I'll tell you, we have better at all of those and lower rates. So again, it's just food for thought. So where's the problem? The biggest problem in today's housing market. It's what Nick Gerli said on Twitter. It's not mortgage rates. Rather, it's homeowners clutching onto unsustainable amount of homeowner equity. Today, homeowners have over $34 trillion in equity on their houses, more than 2 times higher than the bubble in 2006. Are you hearing me, people? So the solution, home prices need to correct by about 50 to 20% on a national basis to bring the market back into balance with home buyers' incomes and interest rates. This type of correction will not be that damaging to the economy since most homeowners would still have plenty of equity. In this scenario, homeowners' equity would drop from around $25 trillion, which is still almost double of what it was in 2006. So is he right? According to Think Like a Real Estate Appraiser, American homeowners are more locked in than they have been since the 1980s. And this chart supports that. They're not moving. Further, according to Fortune's top economist, he warns that the United States is on the precipice of a recession and it will be hard for the Fed to rescue. Why? Well, according to Mark Zandi, and he is one of the best economists out there, the shocking jobs report on Friday wasn't the only red flag. Indicators from the past week paint an overall picture of an economy that's headed for a downturn. And this is from indicators from the past week, and it paints an overall picture of an economy on the edge of a downturn. Not only is the labor market weakening, but consumer spending is flat while construction and manufacturing are shrinking. He warned, adding that the Federal Reserve is going to have a hard time reviving growth with inflation still above its target. And housing is at the center. Again, I see a recession as a sale. And it's like everybody knows, we love sales. How about a 5-year run on a Black Friday type of housing sale? Wouldn't that be great for you? It'd be great for me. I hope this helps. Listen, if you're working for a regional banking operation, you're not selling great rates. And right now, more than ever, with rates escalating at the highest pace they have in history over the past couple of years, people are rate sensitive. It goes like this. Rates don't matter until they do, and I don't care what your employer says. And if you think you have to compromise technology, you're out of your mind. Fill out the information down below and find out what we're doing with our team at the Loan Factory.